how the activity is generated creates a taxable event if the person never tracked. So you never say, oh, I intended to do this. Well, what's the real intent? That's what the government looks at. And what is the cost to fix, and how would you be able to prevent it? Doing all these things, well, you understood one way, but the tax law says another way. And that's where the confusion happens.
Hey folks, Flo here with Blockchain North. Welcome to part 2 of our timely podcast series, as I'm calling. Part 1 was talking about mistakes Canadian crypto holders don't know they're making or find out a bit too late. This time we're going to talk about tax structure, entity planning, and advanced compliance for Canadian crypto builders and high activity users. Like I said in the first video, this is particularly geared to Canadians, but if you find yourself somewhere else, listen in, because Mahad has international experience and a lot of the things that are true in Canada are going to be true, at least in principle, elsewhere. So we're going to cover, less common questions perhaps than in part 1, a little bit more, advanced. We're also going to address some of the dangerous situations and questions, issues that you really need to think about now because we're in tax season, but of course in general. And lastly, this is, as I said, part 2. So make sure, if you haven't already seen it, to go and check part 1, because the 2 interviews are designed to be very complementary. And of course, subscribe to the channel you're watching us on. Hit the notification bell if you're on YouTube. Mahad, great to have you back.
Thank you, Flo. I'm happy to be doing this with you and Blockchain North, and as well as for the community. So let's get started.
That's what it's about. It's about the community. So buckle up, folks. Mahad, I know you already introduced yourself in part 1, but some people might have not seen part 1. So maybe a brief introduction, and maybe tell us as well, what has changed in the crypto tax landscape since, let's say, not last time we spoke, but last year.
Yeah, I mean, last year when we were speaking, we were getting started, or we were in the middle of bull run. And now it's a bear market, and bear market is when everybody starts building. And our firm, just to say a little bit about me, I've been an accountant in Canada for 25 years. I hold a lot of prestigious awards and recognitions in both the legacy, the TradFi, and as well as in the crypto community. I've been in crypto for 15 years. And I've seen so many ups and downs in the crypto. 1 hour is a lot of time in crypto. But what I've done for myself is that I've been able to be instrumental ahead of government regulatories by educating myself and educating the 44 employees that we have at Block3 Finance. I've worked for government entities such as Canada Revenue Agency. I worked for Ernst & Young and other big fours. And of course, being in the trenches in the crypto, I've written to so many income tax rulings to the government in order for me to be able to understand and help our community, including individuals that are high volume traders, bot traders, DeFi, stakers, NFTs, miners, dealing with investors, people that are builders, crypto companies, people that are using credit cards, crypto credit cards for making purchases everyday life. And our firm is just strategic in a sense where we're not only just doing accounting and tax, we're taking care of making sure that you as the user have an accurate reporting, audit support, tax structures in terms of what the regulatory, the country that you reside, what the expectations are. We service about 37 different countries at the moment. And how do you basically rely on having clean records, defensible positions? And our philosophy is very simple. It's not what you make, it's what you keep, Flo, and as well as all the listeners. So it's important for you to be able to be proactive in terms of tax planning and having the regulatory, governments on your side as opposed to against you. So today, I'm very excited to cover some of the topics. These topics, have been on the trenches in the minds of so many Canadians and Americans. So I'm happy to be doing this with you, and I want to make sure that the masses are educated so that way that we can collaborate as opposed to competing. I always say it's about collaboration over competition. So the more that we collaborate as users, the more that we're able to win together and not compete against each other. And
You took
that's
the
something that
words
I'm
out of
very
my
proud of.
mouth. I was thinking you're also an educator in this process, and that's why we're doing this today. So let's talk a little bit about sort of when personal filing stops working. At what point does someone's crypto activity essentially outgrow a personal tax return?
Yeah, that's a fair point and is in the minds of so many individuals. So it's not like the traditional TriFi. When it comes to crypto, when personal taxes or an individual outgrows personal tax return is four subjects. So one, the annual transaction volume makes the individual tracking unsustainable. That's one. And then two, the inline between personal investing and the business activity when it starts getting blurred, how many transactions that you have. The third one, I would say it's more of a tax exposure on the business income tax rates, which starts eroding the real returns, the real gains. And the fourth, I would say that is government regulatory, that if the CRA could reasonably argue that you're operating a business, which you most likely you are, that's when you outgrow personal tax return. And then you have to assess, should I be self-employed? Should I have a corporation? What are the consequences? The regulatory filings, these are all the things that someone has to pay attention to. By you being in crypto, you have to make sure that you're yielding the returns that you are setting for yourself and for your family as well.
And so, what are the signs that someone should be thinking about incorporating? How would someone know? Obviously, someone that does not have your professional lens.
Yeah, I mean, hiring a good accountant who understands crypto is very important. But again, I would say that consistent high frequency trading and active portfolio management. So the more that you're active, the more likely that the government is going to argue that you're a business as opposed to an investor.
Right.
An investor just buys and forgets. Somebody who has an active portfolio management would have to be a business, would have to incorporate generating meaningful income such as staking, mining, yield, airdrops. Those are all the triggers of someone should incorporate. And I would also say with or without others being part of the crypto activity. There are a lot of people that collaborate. So education, like being in Telegram, being in Slack, being in Reddit, being on Discord, those are all the triggers that you should start incorporating because you're active. And of course, somebody who has a long view trajectory, which I talked about in the first episode, having a long-term planning where corporate taxes could be used as a deferral, which creates a measurable advantage for you in order for you to be able to keep a lot of your money in your pocket as opposed to giving it to the government.
Got it. I suspect a lot of people that are watching right now are thinking, shit, forgive my language. It sounds like I should have already incorporated. If that is the case, can they sort of fix it retroactively?
Um, the real answer is no.
Yeah,
You cannot incorporate retroactively.
no.
Like imagine going to the government and saying, "Hi, government, my name is Bruce, and I want to incorporate from 7 years ago." You can't do that. The articles of incorporation is present, so you cannot incorporate retroactively to change the past tax treatments,
Yeah,
the personal tax treatment. But you can restructure going forward to capture future tax efficiency. And that is Section 85 of the Income Tax Act. That's very important because it talks about how you could take the gains of today to going forward in terms of creating tax efficiency. And I would also say that the transition itself needs to be handled carefully to avoid triggering unintended disposition. So you don't want to say, oh, today I'm going to sell everything and then I'm going to start new. No, that's not how it works. It's better to have a good understanding so you don't pay a lot of taxes to the government. And the cost of doing the whole reconstructuring is almost lower than the cost of staying exposed. Okay. And I really mean that. So there are a lot of people that say, oh, you know what? I'm worried about the cost. Well, what about the taxes that you will save? What about the future taxes that you will save? The fact that the government, you're exposing yourself to the government. And those are all the triggers that you should incorporate and start now so that the future plans are put in place.
yeah.
That's what I would say.
It's interesting because the Bitcoin standard teaches people about low time preference and like focusing on the long term and not just the short term. And that's essentially what you're talking about.
Yeah, that's right. The same rules apply, you know?
Yeah, well, those are kind of, I guess, the laws of the universe, you could say, right, or something
Mhm.
like that. So
That's
from
right.
Bitcoin, let's go to let's talk about DeFi actually and on chain activity. So Why does it seem like it's so difficult for DeFi users to report correctly under Canadian tax rules?
Everything is complex when it comes to crypto and under the Canadian tax rules,
And
but
taxes.
specifically, exactly, and specifically DeFi and on-chain activity. One of my favorite, if I could say my favorite, it would say Hyperliquid. I've seen a lot of people that use Lend and all these kind of things. A single DeFi transaction can contain multiple tax events. Okay, so that's number one. CRA auditors are trying to understand, and I have to sometimes educate them, unfortunately, by explaining it to them what are the real tax treatment and why is it creating multiple tax events. Okay,
Mm,
because they're like, how is this one transaction
yeah.
a swap, all these other things. I don't want to get into too much complexity, but I have to explain that each DeFi transaction can create multiple taxable events. Liquidity pool entries and exits and rebalancing each has their own tax treatment. So when you're doing a lend or when you're trying to exit positions in DeFi, there's a disposition, a fee, and then a swap. So that's another one. And then there's no standardized regulatory bulletin that or guidance that I can rely on as an accountant or that you can rely on as a consumer in terms of trying to explain to the CRA, especially for DeFi and on-chain activity. And then lastly, I would say that the software tools consistently fail to parse complex DeFi transaction flows in order to create an accurate and meaningful report. So if you're using, for example, Coinly, when you're trying to run it, it creates 6 transactions. One is merely just one transaction, but underneath it has many layers within. But that's the complexity. That's why it's so complicated for a government to understand, and that's why the rules for the Canadian government is very complex in terms of trying to make you aware and teach you how the tax treatment works, never mind what your obligations are. And that's why Block3 Finance has been excelling in this format. I would say that maybe 70% of our clients are DeFi users, and that's where majority of the complexity comes from the Canadian tax government.
70% of your crypto clients.
70% of our crypto clients.
Right. Yeah. Yeah. Yeah.
That's a large pool.
Yeah. Yeah. Exactly. Exactly. How are things like lending and borrowing and liquidations taxed in Canada?
Yeah, so I have to take one person, take his holding, take his leverage or daily activity, his his staking, and then his mining and his lending. So it's very complex, as you could see. So when you're talking about lending, borrowing, and liquidations, interest earned from lending protocol is taxable income at receipt. So as soon as you receive it, it's taxable income. Borrowing itself is not taxable, but the liquidation of collateral is. And that is confusing, but you think about it. If you borrow money, there's no tax, but the liquidation of those borrowing creates a taxable event. And the timing and the fair market value at the moment of each event determines the tax treatment, whether you're an investor or a day trader. And lastly, I would say that the misunderstanding of the collateral movement between, the DeFi is one of the most common DeFi reporting errors. So when you're relying on an accountant or a user, or you are trying to file your own taxes, it's very important to understand the collateral movement of each, so that way that there are no reporting errors. And that's one of the key things that CRA always says, I got you. And when CRA says that they got you,
Yeah.
it's
Not good.
very complex, and that's not a good look for you, and as well as what you're trying to achieve in the crypto.
Yeah, like you said in part one of this series, if you haven't seen it, go and check it out. You mentioned that basically you want your behavior, towards the CRA, towards the authorities, to be voluntary, to be compliant, and I guess proactive. rather than have them contact you. If they contact you, you're already in trouble, basically.
Yeah, I mean, you're waiving all your options. And I said this in part one. So if you haven't listened to part one, go back and listen to part one because I talk about, when CRA doesn't contact you or Revenue Quebec doesn't contact you, you have access to voluntary disclosures, taxpayer relief for penalties and interest. But as soon as they contact you, forget the voluntary disclosure. You don't have that option anymore. And the chances of taxpayer relief is very limited. Where you had 90% chance, now you have 2% chance. And that's why it's important for you to be upfront and proactive as opposed to being reactive.
Yeah. So a lot of DeFi users probably think that, if they're not selling to fiat, nothing is happening in terms of tax implications. But I'm pretty sure you have a story that shows us maybe what the kind of worst case scenario would be for, a DeFi user to receive a bill they never expected.
Yeah, and this has happened so many times over the last 5 years, more so. And in the part one, I talk about how the government is now using AI to be able to,
Yeah.
to trigger all these individuals that never thought that they would get caught. Now they're being caught. But in terms of answering your question, Flo, the real client example, to give you a real client example without identifying details, how the activity is generated creates a taxable event if the person never tracked it. What the CRA's view of the situation looks like versus from the person's assumptions. So you never say, oh, I intended to do this. Well, what's the real intent? That's what the government looks at. And what is the cost to fix and how would you be able to prevent it? Those are some of the things that you can proactively do and keep those options open. When you are doing all these things, well, you understood one way, but the tax law says another way. And that's where the confusion happens. And that's why a lot of people are getting caught in a trap because they're having to explain their assumption, but it's not their assumption that matters. It's what the rule of law says and how your accountant can help you. And if you don't have an accountant that understands crypto, I would say a big good luck, because one of the things that you're doing is that you're assuming guilt. And when you assume guilt, it's you're in the hands of CRA at that point.
Very, very well, very useful to put it this way. Yeah. So let's switch gears a little bit and talk about things like staking, which of course is staking is a sticking point in the sort of negotiations right now around stablecoin legislation in both Canada and the US. It's actually kind of interesting to see them in parallel. Let's also talk about mining and passive crypto income. So first of all, how does the CRA treat staking rewards? And is it income when you receive them or only when you sell them?
Yeah, I mean, in the Income Tax Act, for both Canada and the US, there are two types of incomes. There is active income and a passive income.
Okay.
Active income is when you're sweating for the money and you're working to earn that income. And then passive income is when you're investing what you already have and is generating additional income for you, right? In terms of investing. Now, staking rewards are taxable as income at the fair market value when you receive it.
Mm-hmm.
And then later when you sell it, it creates a separate taxable event that a disposition of its own gain or loss, has to be reported. So this means staking creates two layers of tax, not one. Okay. When you receive it, it's taxable. And then, the disposition is also taxable. The frequency of those rewards also makes it that you have to track and report significantly. Again, it creates more complexity. So when you're talking about staking and mining and all these other things, it's important to understand what you're getting into. One of my favorite wallet is Tangem. Tangem has all these coins that you can store, and Solana is one of the things that you can stake. Now, you buy Solana, you're holding Solana, you're staking Solana, you're selling Solana. It creates all these multiple layers of tax. And as an accountant, I need to cipher through what your intended was and what you're trying to do. And this is where the government says, this portion is income, this portion is holding, this portion is this, that. And by the time you get to what you thought it was one-page answer, you're now getting 38 to 45 page answers. And that's where people get caught.
Very, very, very useful. What's the difference between how the CRA would tax, let's say, a casual staker versus someone who's running a real staking operation?
A casual staker reports income on each reward that they receive. Okay. An operation may be classified as a business, meaning that 100% of it is taxable with no capital treatment. Somebody who's basically running a staking operation is staking on everything. So as soon as CRA used to have a rule that if you're using Celsius, well, Alex Machinsky is long gone. For some of you guys that don't remember, but everybody that was using Celsius was being deemed as somebody running a staking operation because that's what Celsius was, right? The business classification also opens the door for expense deductions, but increases the overall scrutiny. So yes, you can deduct cell phone. Yes, you can deduct all these expenses, but then you're paying a higher marginal rate of tax if you're reporting it as self-employed and not as a corporation. So the line between the two is drawn by volume, the consistency, and what infrastructures that you've set in place in order to determine if you're a casual staker or if you're running a full business. And that's where the CRA assesses the two.
Yeah, it makes a lot of sense. Well, you make it sound so simple, but obviously it's a little bit more complicated than that. But at least
25 years of experience and 15 years in the crypto of that 25.
I
So
don't know
yeah,
if I
being
envy
being
you.
an OG.
Yeah, for sure. I don't know if I envy you or not, but good for you, and good for those who are watching right now to benefit from that knowledge.
Yeah, I
Um,
think you want to have a friend who understands your intent, so that way that they can keep you in trouble. And a
yeah,
lot of people say that, and I'm very blessed that I spent a lot of time learning and differentiating the two, so that way to make your life and your income and what your intentions are and your assumptions are a lot easier to show you the outcome as opposed to showing you, oh yeah, now you go pay this to the CRA. I don't do that. And
yeah.
that's something that I've really enjoyed.
Growing up, my dad
Yeah.
always used to say, "You want to have a lawyer friend, a doctor friend," and I think he forgot an accountant friend.
Yeah, I think he did forget,
Crypto,
especially in crypto.
yeah, exactly. And finally, for this chapter, how should Canadian crypto miners be reporting their activity, and where do most of them get it wrong?
Yeah, so we have a lot of miners in Africa, but if you're in Canada, mining income is taxable at the fair market value at the time that you receive the crypto. So there are companies where they're doing it for you, but as soon as they give it to you and it ends up in your wallet or something that you own, it's taxable at the fair market value at the time that you receive it. The other thing is that if mining is a business, which it is, the whole income is fully taxable, but the equipment and the electricity and all the things that the infrastructure that you put in are all tax deductible. So most miners, what happens is that when I'm looking at a Canadian miner, most of the time, I would say that 90% of the time, the miners underreport income. Sorry, they underreport because they don't track their fair market value at the time that each transaction is received.
Okay,
Okay, so if you're not tracking when you receive it, especially if you're in a bull market and now you're in a bear market, you're overpaying taxes, right? So it's important to have a ledger or have a good accountant that can track when you receive those mining, rewards. And then selling crypto later creates a taxable event, right? Which is a second taxable event on the gain from those income to the sale price. So it's very important for you to be able to understand if you're a miner in Canada, US, Quebec, Lithuania. So there are different tax treatments for each of those countries, and it's important for you to be aware of it.
okay. All right, folks. In case you're sort of tuning in, I mean, hopefully you watched from the beginning, but we're speaking with Mahad Mohamed, founder and CEO or managing partner. Sorry, but in any case, the man at Block3 Finance with 25 years crypto taxation expertise in Canada, but also internationally. We're answering some key questions and some timely ones too, because of course here in Canada it is tax season and probably in other parts of the world too. Also, if you haven't seen part one, which would have been released about a week before this interview will come out, go and check it out. And of course, subscribe, hit that notification bell and you won't miss any of these really insightful videos we're putting together at the moment. So, Mahad, we're about halfway. How are you doing?
I'm good. I'm good. I'm just getting started.
You're
So
just
let's
getting
go.
started. Perfect. All right.
I'm
Um,
getting warmed up.
Great. Let's switch from mining to a very different topic: NFTs and sort of the creator, economy out there. How does CRA actually tax creators differently? NFT creators from, like, for example, NFT buyers and sellers.
Yeah, I mean, when it comes to NFT and creator income, buyers and sellers are taxed on the gain or loss at the disposition, the same as them having a crypto property, right? Commodity.
Yeah.
Canada Revenue always talks about commodity, commodity, commodity. They don't generally reference NFTs or creator income. But as an accountant who understands crypto, I'm the one who has to define what the commodity is based on your situation. So creators are taxed on the full sale price as income because they produce the asset at a minimum cost base, right? So because they're creating a content and then they're receiving income, so their income, has a minimum cost base. And then the other part to it is that receiving royalties as a creator. So once you create, let's say, music, and then you're receiving royalty, it creates a secondary sale of an ongoing taxable income each time that they are received. So it creates a little bit of tracking mechanics that we have to do as an accountant. While you think that, oh, it's all in one. I receive royalties every month, but you receive royalties from different platforms. And that is why we have to be able to create the received date, the received platform, and all of that. And lastly, the NFT creators have no idea on what taxes that they owe on royalties that is hitting their wallet automatically, right? So when did you receive it? Like sometimes they receive it in bulk, sometimes they receive it daily. So as accountant, we have to reconcile all the transactions, all the NFTs on each of the platform in order to calculate the taxable events.
Yeah.
And share those reports. Yeah.
That's the work, basically. That's a big
Yeah.
chunk of the work, I imagine. Now, some NFT projects involve both creative work and also token economics. How does the CRA then untangle the two?
Um, this is where CRA has struggled a lot because crypto has evolved over time.
Okay.
So the way the CRA does is that they look at the substance of each revenue stream separately. So they separate everything and they look at each income and each work that you've completed, in substance, what the intent was, what the assumption was. So the sale of NFTs and token distribution, staking rewards, royalties, each have their own tax treatment. You cannot just mesh all of them and say, this is my taxable event.
Okay.
We have to separate all four. And then combining them into one bucket that I talk about, which a lot of people do, is a common mistake that creates an audit risk because it's not, it's a realized business income. Some apply in GST or HST or QST. So we need to be able to differentiate them, and proper subclassifications on day one saves a massive headache that you will have later on. Because at the end of the day, CRA can request audit records for the last 3 years,
Yeah.
and they can extend that exposure up to 6 years. So it's important that you have proper documentation. And why not do it on day one? Why do it on day 100? Because it's harder to go back and differentiate which each one does. And that's the main issue that a lot of people get into.
Yeah.
Yeah.
Okay. Super clear. This next section is the most interesting, personally, being an international guy with cross-border, let's say, activity. So I guess a lot of Canadian crypto builders are in this situation. They are in Canada, they're registered in Canada, but they also have US exposure. So can you talk a little bit about some of the, let's say, the most common cross-border traps, let's say?
Yeah, I mean, I have clients that are in Africa, but they have children and wife and all this in Canada, which is understandable because they're minors. Crypto users travel a lot, so they have some exposures. They are interested in buying different properties around the world. But in terms of answering some of the traps, based on the question that you asked, Canadian residents are taxed on a worldwide income regardless of where the crypto activity occurs.
Yeah.
Okay. That's
Same
very
as
important.
Americans, by the way, right?
Sorry?
Same as Americans. Is that correct?
Them as Americans, yes. So where you are a resident is taxed on the worldwide income regardless of where the activity occurs. Second, the US based exchanges or Seychelles exchanges, some of them may have to report obligations that creates a US tax exposure as well, or a Canadian tax exposure as well. So the treaty relief only exists, but only if they're properly documented and claimed. So it doesn't automatically apply. So for example, somebody might say to me, oh, Mahad, I lived in Bulgaria for 6 months of the year. I lived in Canada for the other 6 months. Well, the treaty is not automatic. I have to say 6 months. Jose lived in Bulgaria, 6 months in Canada, and I have to calculate the tax treaty
Yeah.
in terms of what relief that you have to apply. So that way, that double taxation for most cross-border individuals creates a real risk if the filing is not coordinated in both jurisdictions. Okay, so it's important to tell your accountant where you were and how many days that you were in Bulgaria or in Canada, so that way that we can properly coordinate the tax treaty between both those jurisdictions.
Yeah. Yeah. Double taxation
Mhm.
is a real risk, of course.
That's right.
If a Canadian is holding crypto on a foreign exchange worth more, let's say, than $100,000, what filing obligations are they missing?
Yeah, so if it's personal, it's a T1135.
Okay.
If it's corporation, then we have to do the 1134 and the 1135 as well. But the form is called Foreign Income Verification Statement. And this is required for individuals that are holding foreign assets exceeding more than $100,000 Canadian,
Okay.
okay, dollars
Yeah.
in cost. So a lot of exchanges, they track in USDT, but you have to convert that to Canadian dollars, and that is the magic number in terms of what forms are required. The other thing to it is that most Canadians are using offshore exchanges like Coinbase or Binance or Bybit or Mexi or you know but it's or other exchanges that are not yet even miners mining softwares that are located in Africa. They just don't. Most Canadians think that the rule doesn't apply to them. It does. You have to. The late filing for you not complying with the T1135 is $25 per day, and the maximum penalties can reach up to tens of thousands of dollars if you don't report it for multiple years. Okay, so getting the classification wrong on either side of the border compounds to a problem, not only just double taxation or tax treaty issues, but now all of a sudden you have penalties and interest for tax debt or misfilings that is now on your hands in addition to the tax
Wow.
treaty issues.
What if a Canadian moves to the US, for example? Does the CRA still want a piece of their crypto?
Short answer, yes.
I
But
feel like
at the time
the
that
answer is always yes, right?
the answer is always yes. I've never seen the answer be no, or it depends, right? So Canada treats you leaving the country as if you sold everything on the day that you entered the plane. Okay, so on the day that you left, the CRA will or Revenue Quebec will treat it as you sold everything. So that means that you could owe taxes on some things that you haven't even realized the gains just for moving. Okay, so if you don't file correctly in both countries, your risk of being taxed twice on the same gains is absurd if you don't have a good accountant that is knowledgeable in this space. So this is one of the highest stakes of situations in cross-border crypto, and it needs to be. We need to properly plan it before someone just enters the plane. Oh, I've had enough of Canada. No, 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 no. You can't just like that. While it's common sense, it doesn't. Common sense doesn't apply in taxes. So we need to make sure that we help you plan for those situations properly, so you're not, having to pay too much in taxes.
Yeah, exactly. All right.
Mhm.
Well, look, I think we're getting towards the one of the last chapters of this interview today. If you're still watching, we're talking with Mahad Mohamed of Block3 Finance. Very wide-ranging interview. Really, really clear, sharp insights. So stay on with us. Really, we're going to be talking now about structure as a long-term advantage, because that's really the thing, right? I mean, what we're talking about here isn't just protecting the downside; it can also become a strategic advantage. But I'll let Mahad tell you about that. So, Mahad, beyond incorporation, what are other structural decisions that Canadian crypto businesses use to manage to tax? Sorry, decisions can Canadian crypto operators use to manage their tax exposure?
Yeah, I mean, of all the things that I do, I would say that this is one of my most favorite subjects that I like to talk to people about, because everybody who's in crypto is not here for short term, at least the
Hopefully,
people that I meet.
yeah,
Bull market always comes every 4 years, right? So every 4 years there's halving. Regardless of what BlackRock does or all these, I feel like, the 4 year cycle has not been broken.
yeah,
A lot of people got caught up in this bull market thinking that, the 4 year cycle is not going to happen. And here we are. All right. So we went from $126,000 of Bitcoin to now what it is today, around 71,000. But answering that question, having a corporation, a holding companies for long-term asset accumulation is very important. So when you're looking at structuring for long-term advantage, let's say that you create a federal corporation in Canada. That federal corporation, the Canadian Business Corporation Act applies. The rules of the federal applies, right? So having a long-term advantage would also be introducing salary versus dividend compensation strategies within a corporation. Those are some of the things that we look at. Also creating trust structures for estate and succession planning around crypto wealth. Who are you leaving this money to and why, and how do you create planning around it? And
yeah,
then, what each structure does is that it serves a different purpose. So there's not really one size that I can give you a blueprint and say, here, this is the right way to do it. Everybody's different. Everybody has a different, children, family, no children, not married, married, widower. So we have to make sure that we look at that situation, assess that situation, and then create a long-term strategy for that situation. And
yeah.
that's one of my favorite areas that I like to get into. Mhm.
Yeah, I was going to say that that's the value of having a human consultant, not a bot, but having someone that you can actually talk to, right? And who will personalize. I guess it's kind of like coaching for fitness or something. You could watch a video that is produced for a wide, audience, or you can hire a personal coach. Obviously, not the same price, but also not the same value, right?
That's right.
Yeah.
That's right.
So,
ChatGPT can only do so much.
which one do you do? Do you have a personal trainer?
I think I figured out this industry better than anyone can when it comes to regulatory concern.
I
So
was asking about if you had a personal trainer for fitness.
for fitness, I like to do things on my own. So
Ah, okay.
I have an accountability partner. The accountability partner is very important to hold me accountable. But I also have to say that being consistent on small things creates a big leverage results, right? So you don't always have to go to the gym for 5 hours. By you going to the gym for 20 minutes, which is what I do, it creates a compounding effect for later on. So you
I
just have
can
to
see
stay consistent.
I can see the result, but there's no accountability partners in crypto taxation. You actually need an accountant, right?
Yes, that's right. That's right.
Um, how does proper structure affect audit defensibility specifically?
So I talked about the earlier question that you asked, but a well-structured entity
Mhm.
has a clean separation between a human being, between you and the business activity.
Right.
So corporate records, financial statements, board minutes creates a paper trail for the CRA and Revenue Quebec from that perspective. So it shifts the conversation from prove what you did to reviewing and organized documents, right? So CRA doesn't have to say, show me what you did. What did you not do? Why did you do this? All these questions are created on corporate records, financial statements, balance sheet, income statement, financial notes. So that way the CRA can read it and say, okay, and now I understand why they did what they did. So there's less questions. And then structuring also prevents an audit. So it creates the outcome of one.
Okay.
Okay, so the outcome of one is very important in a federal corporation act. or if you're in Ontario, is the Ontario Corporation Act, or Quebec Corporation Act. So what you want to do is you want to take all the risk that an individual has, transfer that risk to a business, and have a proper paper trail, so that way that the exposure of audit becomes less and less because it has been properly structured.
Makes perfect
Mhm.
sense. And what's the most expensive structural mistake that you see Canadian crypto operators making?
Not going to the accountant. So running, I would say that somebody who's running a significant activity through a personal tax return, it basically messes up and it gets qualified as a business. But the intent was always the mindset of an investor, but you change that mindset through paper trail. So
Yeah.
activity is very important in terms of distinguishing. The tax rate differential alone between a personal tax rate and a corporation tax rate, costs us tens of thousands of dollars each year. Do you want to pay 47% tax rate, or do you want to pay 12.2% on the first $500,000? But the real damage is also the compounding exposure. So every year that is not structured is another year at risk, another year at risk for audit, another year at risk for tax, penalties, interest, all of these things. So by the time people ask about structuring, they've already left so much money on the table. And now they're thinking about, okay, let me stop the bleeding and do it now. But why didn't you do it initially? We offer a free consultation. You just need to book a meeting and
We're
make
going to get
yourself
there.
available.
We're going to get to the free consultation. Yes, folks, if you're watching right now, we have a few more questions, but we do, there's a prize. Let's put it this way at the end of this, interview, or somewhere else if you're a little bit crafty and you can look for it already. But why would you just not stay with us, right?
Yeah,
Um,
that's right.
Last part of this conversation, looking into the future a little bit. The CRI has already signaled that it's going to increase its focus on crypto. In fact, it already has. You mentioned the use of AI. That may surprise some people, but at some point they get wiser, of course, and they also adopt the same technologies we all use. What should Canadian builders expect over the next 2 to 3 years?
Um, I would say in the next 2 to 3 months, but if we're going to talk about the next 2 to 3 years, I would say that more data sharing between CRA in other jurisdictions, both domestic and international exchanges.
Okay.
There are 7 licensed in Canada, but there are over 50 exchanges around the world. But more data sharing is coming. Enforcement is coming. An increased use of on-chain analytics to trace unreported activity. I've seen cases where the person now is saying, this is my CSV file. I went to X accountant, and then this is what this accountant had me report. And when I look at it, it's day and night. There's going to be a lot of scrutiny on DeFi, on staking, on NFT activity, and as well as there'll be less tolerance for errors. While it's early, the CRA is giving what I call the grace period, but the grace period is closing. So there won't be any more, oh, I'm sorry, or I thought, or I did this, and that was not my intent. There's no tolerance for errors anymore. You're gonna be accountable for the actions that you've done as a result of you not going to an accountant who understands what you're getting into. And crypto is very, very complex, and not many accountants in Canada. I would say that only 2 accountants are good at, and those 2 accountants are Mahad and Kevin. Okay, and they're both at Block3
I was going to
Finance.
say
I don't
Kevin is
think,
your partner, isn't it?
yeah. So I don't think that you're gonna meet anybody who's better than these 2 as of today, because we invest in a lot of knowledge and education in terms of learning what the new trends are, and Polymarket, Pump.Fund, virtual AI, all these things we've mastered it already. So we don't need training. We're actually helping users of those areas in order for us to be able to provide you with a regular, consulting that you require, as opposed to being left in the hot water for the CRA. Mhm.
Wow, you've shared so much, Mahad, today. I certainly feel educated, and I'm sure those who are listening will feel that as well. Do you have any final thoughts? Like, how do you help us sort of like wrap up this conversation? I know you've said obviously you want to get, you know, I guess for me, let me just tell you what I've learned. I've obviously learned that you have to be proactive. I've obviously learned that things are much more complex, and that there's often hidden risks, hidden costs, layers, and that that's why you need professional advice. That's probably the biggest lesson here: is you need professional advice, and you need to also think long term, because it's looking back is important, but also creating this strategic advantage, going forward, especially if you're running a business. Is that a good summary? What would you add?
Yeah, I mean, I 100% I agree with you. Having the right foundation protects everything you build. And that is very important. And that's what I try to do for crypto users every single day, Flo. And I'm looking at you and I'm talking to you. If you're out there and you're in crypto, if you don't have the right foundation and you don't have a good accountant that understands crypto, you know, I don't want you to be taken advantage of by a government entity because you have, trusted somebody else, another accountant or a tax software to do your work. But have the right foundation, have a good accountant. Always remember, early planners would compound you in a favorable way, and a poor planners compounds against you. So that's something that I started saying. And of course, it's not what you make, it's what you keep. And having said that, at Block3, we have 44 accountants, and those 44 accountants are here to serve you every day, answer your questions, making sure that you're on the right side of the law. Those are all the things that we do every day, and that's what makes us proud, and that's why we drive to work every day. And when we're going home and driving home, we're always saying to ourselves, did I make a difference today, right? And that's the question that I ask my accountants every single day. Did you make a difference today for someone? And that's what's important to us at Block3 Finance.
Amazing. Well, and that's actually kind of a nice lesson for everybody. If you're building right now a crypto project, think about that for yourself too, right? I mean, are you making a
That's right.
difference for your users, for your potential clients, for your community? So, Mahad, with that in mind, thank you so much. This has been a real journey for me, just across two interviews, but long form. I hope you guys stayed till the end and found this useful. I'm sure you did. I mean, you really should consider maybe re-listening to it, or even take the transcript and plug it in ChatGPT and ask it to summarize the notes for you. But ultimately,
Right.
the conclusion is the same. Where can people find your content, by the way, Mahad? Where can people
Um,
follow you?
you can go to our website at block3finance.com, or you could send us an email, inquiry@block3finance.com. And every single user who's listening from Blockchain North is entitled to a free 30-minute consultation.
Yeah.
So if a situation applies to you and it's weighing on you, or you want to get more clarity after listening to this, or you have additional questions, you can book an appointment with either myself, Kevin, or any of the 44 accountants. We'll be more than happy to answer your questions. And don't hesitate. We're always here, available, in 3 countries that we operate. That actually we have an office. We have 2 offices in Canada, in Oshawa and Newmarket. We have an office in UAE, in Dubai, and then the third office that we have is in Singapore. So we're here to help you. We're here to serve you. We're here to make sure that you're on the right side of the law and not against the law.
And that's ultimately for me the crux of this interview. It's that obviously accounting for a lot of people seems dry and unsexy. Yeah, but look at Mahad, he's pretty sexy. You know what I mean? I'm just joking, but more, I mean, I'm not joking that you're sexy. I'm joking that this is the topic here. But really, this is about protecting your downside, but it's very much also a strategic decision. I feel very convinced, I have to admit, after listening to Mahad for almost 2 hours across these 2 interviews. So we will talk, Mahad. Folks, make sure to check out part 1 of this mini series as well, that came out about a week before you'll have seen this video come up. We talk about mistakes that Canadian crypto holders don't know they're making. So this is something that you'll want to listen to as well and watch. Other than that, folks, and Mahad, thank you very much. Everybody be safe and, of course, be compliant. All right?
Yeah, thank you so much, everyone.